The Export Promotion Council says exports grew by a marginal 1% in the year 2012 compared to the 24% growth in 2011. This slump in exports, coupled with Kenya's import-export ratio, which now stands at 3:1, has hurt the economy, hence widening current account deficit.
If you look at our export, it's essentially for every 1 shilling of export that we get, we actually have to spend about 3 shillings in terms of the import. So that gap has been fairly huge. I think in terms of how to address that, then obviously we have to make Kenya even more attractive. That is obviously to attract tourism inflows, and obviously also to attract much more foreign direct investment to the market.
Bill of imports far exceeds our revenue in terms of foreign exchange earnings. And from the flower industry perspective, we are purely an export business activity. And our main market is the European Union, although we are diversifying into other markets like Japan, like the US, like Eastern Europe. And what we are hoping to be able to do as part of the Exporters Forum is to really to boost the country's export revenues. And for us to do this, we need to ensure that the current stagnation of growth in the production we get out of that stagnation by encouraging production among the growers. And how are we going to do this is a big question. And we're hoping to be able to take advantage of the energy that the government is portraying at the moment.
The economic partnership between Kenya and the European Union will see the country benefit from no quotas and duties on exports, making it a free access market to the European Union. The EU remains Kenya's #1 trading partner, accounting for over 26% of its exports and total trade standing in at 18%.
The government intends to enhance the quality, the efficiency of the services to the exporters. And this means that at the point of exit, for instance, the Jomo Kenyatta, we will get to see more efficient processing of exports. We will also see more efficient validation of exports so that we can also benefit from timely VAT refunds.
I think looking through, if you look at what's happening obviously globally, most of those European countries obviously trying to support their own local export markets. I think that's where it's coming from, where they're feeling probably other places in the world are also exporting a lot into their market. But I think going forward, it's a question of Kenyan also being able to produce goods and services at a much more affordable pricing, such that even if the tax regime in those countries is not well regigged, then it still means that you can still be able to make profits out of that.
The manufacturing sector contributes slightly over 10% to the country's GDP and has recorded a 3.1% growth in 2012. It is expected that with the growth in this sector, this will spur country's self-reliance and reduce dependence on imports, in turn increasing export revenue.
Most exporters are sending everything to Europe, but slowly realizing that there is a market for Kenyan goods in the rest of Africa. As Kenya Airways, what we are currently doing is we've just introduced regional freighter service, which currently is operating to 10 destinations in Africa. And that is just to move Kenyan businesses to new markets. Like I said before, they've concentrated mainly on Europe and not into Africa. And yet a lot of African countries are exporting things. We're sending even African coffee. Kenyan coffee goes to Europe and then is re-imported back into Africa.
National carrier Kenya Airways has seen this potential and has embarked on converting some of its passenger flights to cargo freighters. Its partnership with other airlines in the Far East is also expected to boost exports through interlinking trade markets.
Over the years, Kenya Airways has not been a true cargo carrier. We've mainly operated on the passenger bellies and with narrow bodies to Africa. And that's why a decision was taken to convert one of our passenger jets into an all-cargo carrier. And the first one is already in operation. We're having a second one delivered sometime next month, middle of next month in July. And the focus is mainly on Africa. We can see the trade is there. We have not participated in it, hence we've allowed other carriers, mainly from the Middle East, some from Europe, to take advantage. We have a very great network in Africa as Kenya Airways, but maybe we are not flying the right type of aircraft. And that's why we're now flying the cargo planes to make that happen.
If we were to look at also other initiatives that obviously even government is putting in place, for example, we're now talking about obviously having a standard gauge railway run all the way from Mombasa, which is on the coast, all the way to Kisumu on the other border of the country. Then obviously what you're simply saying is that we're able to remove some of these bottlenecks that have affected our export businesses. So I think going forward, these are good initiatives, and obviously that will go a long way in terms of increasing our exports.
On the sidelines of his recent visit to Africa, the US President Barack Obama says he plans to revitalize the African Growth Opportunity Act. This spells better days for the country in a bid to increase its exports ratio and reduce its current account deficit. For Eye on Kenya, I am Laban Clive on Serio.